straight in. Guys, so in today's video, I wanted to break down this super simple trading strategy that was able to get us a nice 1 to 2.3 risk to reward trade this morning. So not only was I able to take this trade, but I also sent this into the Discord for all of the members to be able to take along with me. And as you can see, here's a screenshot of my profits. So I was able to take $2,300 from this trade with an overall gain on the account for 2.3%. Now, this is a super simple strategy, and this isn't something that I'm making up, because here is the backtest result with all of the data to prove that it is a simple yet profitable strategy that you can use in order to be able to quit your job within the next 3 months if you are to consistently be able to trade this every single day. Now, here we have a nice checklist for the rules and the trading plan that we need in order to frame up and execute a high quality trade. So here is the trading question that we took literally today. As you can see, the date is Thursday, the 18th of April, 2024. And as you can see, I sent this into the Discord today at 8:20 in the morning, and at 10:30, we were able to close out this trade. So 2 hours, and we made $2,300. So first, we're going to jump into the analysis of this trade, where I'll walk you through the rules and the trading plan so that I can show you how we frame up this exact trade in itself. And then I'll go through a little bit of the backtest results so that you can gain a little bit of a better understanding as to how this trading strategy is actually playing out. So first things first, let's jump over to the charts and remove all of these drawings so that we can have a clean chart to look at. So the first thing that we have to do is go through the rules that we have. Now, the first rule is we have no higher time frame bias or points of interest. Now, this makes things a lot easier because we now don't have to go through the rigmarole of doing all of this top-down analysis where we try and identify what the trading range is, where we are in terms of structure, what the directional bias is. None of that is involved, so we simply just come onto the charts and follow this checklist. When a trade is presented, we simply execute. So it's nice and simple. It doesn't have to be difficult, which is why we have the rule for no higher time frame bias or points of interest. Rule number 2 is that once we are up 2%, we TP half and we move to break even. Now, this goes for any trades that are more than a 1 to 2. It doesn't have to be for every single trade, but if you want to do things such as trailing stops and backtest the results yourself, then you're more than welcome to. Number 3, we have no time restrictions. However, no trade is to be taken after 3 p.m. UK time. Number 4 is we enter off of a 5-minute market structure shift. We don't want to look for a 1-minute market structure shift. We want to look for a 5-minute market structure shift. Number 5 is that we enter on the fair value gap or order block that created the market structure shift. So we will dive a little bit deeper into that so that you get a better understanding of exactly what we're talking about here. But for now, we continue on to rule number 6, which is we need a minimum of a 1-to-1 risk to reward. Now, this is very key because this is something that was very relevant in the backtest. If we don't have a minimum of a 1-to-1 risk to reward, we will not be taking that trade. Number 7 is we mark out the Asia highs and lows between the times of midnight and 7 a.m. UK time. So if you're not in the UK, then I would highly suggest configuring this to your own time zone. However, because I am in the UK, I'll be marking the zones between midnight and 7 a.m. UK time. And now let's move on to the trading plan. So this is the checklist that we are going to follow in order to frame up a high quality trade. Number 1 is that we mark out our Asia highs and Asia lows. Number 2, we wait for a sweep of either the high or the low. Number 3, we identify the 5-minute market structure shift. Number 4, we take the entry on the order block or fair value gap that created the market structure shift. Number 5, minimum 1-to-1 risk to reward or no trade. Number 6, we break even after structural break. And number 7, we take profit at the opposing liquidity. So now that we've gone through this Judas swing checklist, we've understood the rules, we've got the trading plan in place. We now jump over to the charts. And when we jump over to the charts, this is exactly what we're going to be greeted with. So we wake up, we come into the charts, and immediately the first thing that we do is we identify the times between midnight and 7 a.m. UK time. So what I'm going to do is take this vertical line and place it at the 7 a.m. right here. If I drop down to the 1 minute, we can refine it to the exact 7 a.m. candle, which is right there. Now, if we keep going backwards, we then find midnight, and midnight is right here. Lovely. So now between this time zone, what is the lowest and the highest point within this range? So we take the horizontal ray and we can identify that this is now the lowest point of this range, and this is now our highest point of this range, right? If I replay price just a little bit so that we are within this trading range, and once that is done, we jump over to the 5 minute, and here we go. So this is midnight and this is 7 a.m. Between this time zone, this is the lowest point that price ever went to, and this is the highest point that price ever went to. So now that we've identified this trading range, we now simply move on to the next step. So we've marked out the Asia highs and lows. Now our next step is to wait for a sweep of either the high or the low. Again, remember, we have no higher time frame bias or points of interest, so we're simply just waiting for price to go to either side, and then we're going to take a trade in the opposing direction. So if we come into the charts, what I'm also going to do is show you guys that I utilize this trading range indicator. Now, this indicator helps me a little bit because it makes my life a little bit easier. When I come onto the charts in the morning, I don't have to go and draw the midnight candle. I don't have to draw the 7 a.m. candle. I don't have to go and highlight the lowest point and the highest point. All I simply have to do is remove all of these and turn on my indicator, and there you go. It gives me the lowest and the highest point between this time zone, right? So it makes my life a little bit easier because I don't have to sit there and manually draw this out myself. However, if you are somebody who is new to trading and you would want to do it yourself, by all means, do it yourself. I use this to make my life a little bit easier. Now, having said all of that, we are now waiting for the next step, which is to wait for a sweep of either side. So if I play price on, what we can see is that right there, we get a sweep of this high. So I'm just going to mark this out so that we have a visual representation. So there we have the sweep of this high. Now that we've had a sweep of this high and we've ticked this off of our checklist, we move on to the next step, which is to identify a 5-minute market structure shift. So if we come back to the charts again, where would be our structural point that is going to be having to be broken in order for us to get a market structure shift? Now that would be right there, because if we identify what structure is doing, it's created a higher low, created a higher high, higher low, and then a higher high, right? So because this is how structure is moving, in order for us to get a market structure shift, we need to break below this higher low to put in a new lower low, and then price would retrace, give us a lower high, and then a continuation, right? That is how market structure works. So that's what we're looking for, a simple market structure shift. So again, if I play price on, we can see that price does faff around for just a little bit. And then eventually it comes and it gives us this beautiful push to the downside. Now, as we can see right there, if we zoom in, price did break and close below this point right here. So because it closed with a full body below this line, that means this market structure shift was valid because it closed with a body. If this was a wick, if price wicked below this line, then I wouldn't count that as a market structure shift. But because we closed with a body, that is giving me more hope and confidence in this trade because I now know that the market structure shift has happened. So once that's happened, we come over to our trading plan checklist and we tick that off. And we move on to the next step, which is we take an entry on the order block or fair value gap that created the market structure shift. So again, if we come back to our charts, we can identify that right here, we've got this order block that caused the market structure shift. Above it, we've also got this fair value gap, but we have to take the immediate order block or fair value gap that caused the market structure shift to happen. So now that we've done that, we identify it, we highlight it, and then we come back to our checklist and we tick it off. The next step is to look for a minimum of a 1-to-1 risk to reward. If we don't have that, we will not be executing on this trade. So if we come back to our charts, we then take our short position tool, we place it at the open of the order block, we put our stops just above the high, and then we target the opposing liquidity, which is the other side. So the other side in this case is the Asia lows. So because we swept the highs, we're targeting the lows. If we sweep the lows, we're targeting the high, right? So having said all of that, we come back to our checklist and we can see that it is definitely more than a 1-to-1 risk to reward because it is a 1 to 2.3. So that is ticked off. We move on to the next step, which is we go break even after a structural break. So this is something that can happen once the trade is in play. And we tick off the last one, which is we take profit at the opposing liquidity, which is where we've put our take profit. So now that we've framed up this trade, we've understood how it works and we've ticked everything off of the checklist. And now we can simply just sit back and wait to either get tapped in, missed, a stop loss, or a take profit. That is it. We don't do any management apart from going break even at the structural break and at the point where we take 50% off of the table if price is up 2%. So that is the only management that we do. Apart from that, we let price do whatever it's going to do. So once I had this trade framed up exactly like this, I then sent it into the Discord. And again, if you aren't part of this yet, I would highly suggest going down in the description and clicking the link to become part of the community, because every day we are able to take these incredible trades. And if I go over to the results section, you can see that this year already we've had some incredible trading months. January, we closed at 10.5%. February, we closed at 11.3%. March was a little bit slower at 5%, but April already, look at that. We are already at 15.5% for this week. And that isn't including this beautiful NAS sell that we took this morning. So having said all of that, guys, whilst you are down in the description, I would highly appreciate it if you were to click the like, comment, and also subscribe. And let's jump straight back into it. So now that we've framed up the trade, we've sent it into the community, everyone has positioned themselves, price comes back and taps us in. Now, after price taps us in, it floats around the entry for a little bit. And all of a sudden, price then just decides that it is going to plummet straight towards our take profit. Now, that is absolutely beautiful because that was a nice 1 to 2.3 risk to reward trade that happened in literally less than 2 hours. Now, that's perfect because we didn't have to worry about any of the added things that come with a normal trading strategy, such as higher time frame biases and having to monitor the charts all day long. This is a very simple, rule-based, mechanical strategy that you can use in order to catch these high quality trade setups every single day, because then over a consistently long period of time, we can see that the win rate is incredible, which means we are going to be profitable so long as we stick to the rules and our checklist. Now, having said all of that, we've now framed up the trade, we've executed, and we've taken profits. After this, we can continue on with our day. We then come back the next day and we simply rinse and repeat. That is all. Every single day, we just come onto the charts and we execute the exact same way. So having said all of that, having understood how the trades are taken and seen a live example, let's quickly jump into the backtest, which shows us that this trading strategy has a nice win rate of 61.54%, which is incredible because that is more than a 50% win rate. Now, over a long period of time, over a long data set, we can see that over the last 15 months worth of data that I have gathered in this backtest, we can see that we started off the account with $100,000. And then we ended the account after 15 months with $86,194 in profit, which is an 86% gain over 15 months. Now, that in itself is incredible because this shows you the power of consistently sticking to one trading strategy. And if we continue on down, we can see that the average risk to reward that we got was a 1 to 1.35, which is great because the minimum that we need is a 1 to 1. And from the summary, we can see that we had a total of 169 trades. 104 were winners, 65 were losers. The best win we had was a 4% gain on the account, but the average was a 1.24. Now, we risked 1% on each trade, and this shows that the sales were consistently winning, right? Because we had more sales than losses. And even right here, we can see that there was 58.76% of sales that won and 65.28% of buys that won. So just shows you a little bit of the metrics, performances by day, by hour. We can see that performance by month We've got January, February, March, all the way till December from 2023 until April of 2024. So we can see that we've got a bunch of data. We can also see the trading days. And as you can see, there were multiple days where I didn't actually take any trades. There were multiple days throughout every single month where I literally didn't take any trades. And as we can see in this month of September, there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. That's nearly 2 weeks where I didn't take any trade because the setup either didn't show, or we didn't have a minimum of 1-to-1 risk to reward, or we had gone past 3 p.m. There is a multitude of reasons as to why I didn't trade for a long duration of time. And that is the beauty of sticking to a mechanical trading strategy, because it shows you that you don't have to trade every single day, right? You don't have to spend your life slaving away 9 to 5 at the charts, because you can spend that time with your family. Because as traders, we want freedom. We're doing this because we don't want to be stuck at a job where we have to ask our boss for a holiday or to spend time with our family. So the more time that we get, the better, right? So this trading strategy simply just shows you that less is more. We don't have to trade every day. And it is a very simple rule-based strategy with a great win rate, so that over a large data set, over a long period of time, you can be consistently profitable, and the data is there to back it up. Now, I hope that I was able to break down this strategy well enough for you guys and show you the data set behind it that gives me so much confidence in being able to send these trades to all of the members in the Discord, and we can all profit from these trades together. So if you did get some value, again, I would highly appreciate if you were to leave a like and comment. And if you again aren't part of the community, I would highly suggest going down in the description and clicking that Whoop link in order to become part of the community, because the results are simply speaking for themselves. Even last year, we had November at a slow 5.5, December at 11.5, January at 10.5, February 11.3, March a little bit slower at 5, but April, we haven't even finished the month yet, and we're already at a 15.5% gain on the account. So again, guys, I hope you got some value from this video. And if you did, don't forget to leave a like, comment, and subscribe. And I'll see you all in the next video.